But in terms of new business written, how do you see that trend evolving through the rest of the year?
We've seen in the last half year that the commercial momentum is building in the key strategic business lines that we have. We see in the U.S. 24% uptick in sales in the individual life insurance business. We have seen consistently now for a couple of quarters more than $1 billion written sales in the middle market in the retirement plans in the U.S. We've seen a doubling in sales in the workplace solutions business nearly in the U.K. And also in the Netherlands, our continued progress in providing and originating mortgages for residential property has been successful. And also the new pension products have surpassed the 5 billion mark now in assets under administration. So we see in those critical categories and the strategic categories a good uptake in sales momentum, which we obviously hope to maintain in the course of this year as we are slowly but surely navigating out of this pandemic environment and as the economic backdrop is, of course, improving.
Can I ask you about the particular markets that you serve? Because it stands out that 3 of your core markets, the United States, the United Kingdom, the Netherlands, a couple of these have very rapid vaccination programs. Compare that to what you've had in some of your growth markets, the likes of Spain and Portugal, China and Brazil. To what extent are you seeing those core markets perform because of the vaccination programs?
Well, of course, in markets like Brazil specifically and China and our growth markets there, we're seeing differences in vaccination progress. Certainly in Brazil, for instance, we know that COVID hits very hard still. But in spite of all that, our Brazilian management team has been able to continue the growth path that they were on for the last 12 years. But it's certainly a quite difficult operating environment there, and we're supporting them to get through this. The same in India, in our business in India, obviously. So it's let's say, the world is trying to grapple with getting out of this pandemic. Vaccinations are the most likely route for all of us to make sure that it becomes a manageable virus, a manageable disease. But apart from some markets in the Western world and the rest of the world, we're still in very early stages of vaccination progress. And I can only hope and urge everybody that to get vaccinated and for governments to support the local introduction of vaccines so that we can start to deal with the virus on a global basis.
Lard, what's jumped out about this earnings season is the amount of companies that have some visibility about what lies ahead in contrast to the same time last year. Can you talk about that visibility and also what it's likely to mean for the dividend as you declare this increase from 0.02 to 0.08 per common share? What's the outlook on both of those sides?
Well, we are making good and encouraging progress with the transformation of Aegon. We launched a plan at the Capital Markets Day in December, and we are fully focused on a disciplined implementation of that plan. And what you can see for the last couple of quarters is not only growth momentum coming back in the chosen strategic business lines, but also our expense reduction plans are going very well. We have a target of 400 million by the end of 2023, and we're now at 220 million, which we reported today, which is actually ahead of the target that we had for this year. So also that piece is going well. We will continue our progress. We will work to implement diligently and in a disciplined manner our plans. And with that, we aim to achieve our targets by 2023, which is to have a dividend per share of 25 cents over that year. And the good progress that we're making accelerates the path on that dividend per share, as we announced today, by increasing the interim dividend.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.